Hello traders and welcome to another video review. Today is Friday, July 3rd, 4th, 2025. Let's take a look what do we have in the economic calendar for today. So, non-farm payrolls were published yesterday, so today not much data we got whatsoever. Household spending data from Japan beats the expectations, up from minus 0.1 to 4.7. German factory orders down, way down below the expectations, down from 1.6 to minus 1.4, down below expectations of the forecast, which is minus 0.2%. We are waiting for the unemployment rate data from the Switzerland. ECB and Elderson will give us speech at 10 o'clock. 30 minutes later, we got the construction PMI data from the UK. Russian GDP will be published at 6 o'clock. And at the end of the day, we got speech from ECB President Christine Lagarde exactly at 8 o'clock. So not much of the data, but yesterday's plenty of data. So without any further ado, let's just take a look what's changed on the charts. We start with euro dollar. So the euro dollar 4-hour time frame chart still below the wave 5 high at 1.1830, and this is the pin bar, right? Pin bar. This is like a kind of a pin bar doji candlestick pattern on a 4-hour time frame chart. Confirmation, bounce, movement to the downside, bounce, movement to the downside, bounce. However, we got consecutive series of lower lows, which means maybe, just maybe, we are making wave A of the correction to the downside. However, this movement from 1.1830 towards 1.1739, it's not enough, all right, to establish a wave A of the downside cycle, right? So we just mark this level here, 1.1718, as a let's say local technical support, right? And then there goes the bounce. The other thing is the bearish divergence finally placed, right? Maybe it's not like a strong divergence, maybe it's not something really powerful. Nevertheless, there is a pause from rallying to the upside in euro dollar as momentum diminishes towards the level of 50. Now we are a little bit higher than we was, 55 points. So momentum is positive, but it's not strong whatsoever. The outlook for the euro dollar remains sideways to bearish. Cable. Now this situation is a little bit easier to observe. We got bearish divergence. This bearish divergence likely was played out, so it's now done. We broke below the level of 50 on the RSI with the low of 35. Very nice. We moved back up towards the level of 50. We moved back up from the level of 1.3561 up towards the technical resistance at 1.3680, and now we are testing this level. Any breakout higher means that we can resume the uptrend. However, we need to break back into the positive territory on the RSI, right? So there's a room to the upside here, there's a room to the upside here on the 4-hour time frame chart on the RSI. Only a sustained breakout below the low at 1.3561 opens the road towards the lows of 1.3369 and the channel lower line test. US dollar versus the Japanese yen, we got the breakout as expected. So we broke above the short-term trend line. Now we don't need it anymore. We tested the 100 periods moving average, almost make it towards the 143.94 technical resistance, but after the quick consideration, the bears decided to kicks in and the market is now back testing the local technical support at 144.20. Momentum wise, we went as high as 63 points and now we are testing the level of 50 again. So nothing changed. Fundamentally nothing changed. Basically, generally, nothing changed here on the US dollar to the Japanese yen 4-hour time frame chart. This was just the bounce from the almost extremely oversold conditions up towards the 100 period moving average, a little bit higher, but there is no decisive breakout from the range on the US dollar versus the Japanese yen, which is why we are now moving back into the range on the US dollar versus the Japanese yen. We are waiting for further development. S&P 500, after the S&P after the non-farm payrolls data, made another swing high, but there is still bearish divergence building. We got now another swing high, obvious swing high, 6,284, right? However, it begs for a correction right now, S&P 500. So we getting away from 6,146, the last swing high. We are going slowly but surely, higher highs, higher lows, towards the level of 6,300. Nevertheless, this level, the price is diverging from the momentum. Momentum is strong, is positive, but it kicked again the extremely overbought conditions. If we switch to daily, if the daily works, it looks like it works. The daily time frame chart is again extremely overbought. So look at this, extremely oversold conditions, right after this, just recently in the April, I hope you remember. Now we hit the extremely overbought here, correction, we back up, correction, and now there is no divergence on the daily time frame chart because we have a higher highs and higher highs on the momentum. However, we kicked in the extremely overbought conditions on S&P 500. Very interesting to see. We got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days in a row, 10 consecutive days of a upward movement in a row. Look at this here, look at this here, look at this here. Daily time frame chart, they keep going higher, and then we got this consolidation, pullback cycle, consolidation, big pullback cycle. Maybe look at this, a little bit here, pullback at least 60%, a little bit here, pullback, I don't know, 50%. Below this level here, below 6,069, maybe below even 6,000 level, we will see, but we are close for a pullback on S&P 500. And last but not least, let's take a look at the Bitcoin, because the Bitcoin is reclaiming the level of $110,000. And as we managed to forecast, our scenario was that the market will hit the supply zone, right, the pink rectangle, and then the bears will kick in, and this is what's happening. We got first pin bar, second pin bar, then we got bearish engulfing again. This is the battle of $110,000. If bulls win, we back towards 100, and this is a $12,000 or and above. And a breakout happens here, the Bitcoin hits new all-time high. For now, we're testing the previous technical resistance, 108,836. Momentum is strong, it's positive, 56 points. Bulls are in control of this 4-hour time frame chart. And the key breakout, the key battle is still ahead of them, the battle of the supply zone. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye-bye.